Hi everyone, welcome to A1 POA, your guide to mastering accounting concepts. For today, we will be covering this topic, Accounting Information System Part 2. Let's go. Before we dive into the LO for today, let us recap what we have covered under Part 1. For Part 1, there's two LO. The first LO, we talk about the types of business transactions. We go about defining the business transactions and having the ability to be able to classify the various types of business transactions, such as cash versus credit and capital versus revenue. Next, we talk about why transaction matters in accounting. After that, for the next LO, under part 1, we talk about the accounting cycle, whereby we define the accounting cycle and thereafter we state the X types of the accounting cycles and their sequence, step by step. After that, we talk about accounting cycle as to why it is important. We discuss importance of accounting cycle. So that gives us a good start state for today. Accounting Information System, AIS in short. 3.1, we need to learn how to define AIS. After that, 3.2, to be able to identify the purpose of AIS. 3.3, describe the components of AIS. 3.4, having the ability to differentiate the various types of AIS. And thereafter, to analyze how an AIS works. Thereafter, having the ability to identify the advantages of computerized AIS. And with that in mind, be able to evaluate the limitations or risk of computerized AIS. Last but not least, to assess the relationship of AIS and ethics. Without further ado, let us now dive in. LO3. Under this LO, we want to learn how to define an accounting information system, the definition. So, an accounting information systems is a set of procedures, tools, and people. So, over here, you have procedures, you have tools, and you have people. And all these are interchangeable. For what purpose? To collect, record, store, and process financial information to produce useful accounting reports, reliable and relevant reports for management decision making for survivability in the short and as well as in the long run. So over here, it is a process of input, processing, and last but not least, output. With that, let us now sum up. In short, is how financial informations flow, right? The keyword is flow through a business from transactions to data and finally to the financial statements. Next, LO 3.2. To have the ability to be able to identify the purpose of an AIS. So the main purpose, the primary purpose of an AIS is to ensure accurate, timely, and reliable financial information is available to users such as management, owners, and investor. So the system itself is embedded with control to ensure this purpose is fulfilled. In other words, it helps a business runs its accounting efficiently. So the keyword over here, efficiently. What is efficient? Efficient is it's all about doing the right thing. So by being able to help a business to run its accounting efficiently, It helps to reduce human error. Human error as a result of that is being reduced. And thereafter, providing useful information for decision. 3.3, this is a table. For this table, in total, there's 3 columns. The first column, we talk about the component of AIS, description, and thereafter with examples to reinforce your learning for every component. So the first one, people. People, we have people over here. These are the users who operate and maintain the system. People who operate, you have the warehouse module. For example, you have the sales module, you have the accounting module, so on and so forth. So you have different users from different departments who can operate and can only operate certain modules, right, as part of internal control. And of course, you have the IT department to maintain the system on a regular basis. Examples of user, internal stakeholders, we have accountants, clerks, auditor, manager, so on and so forth. Manager, they need to look at their call center performance. They need to look at their profit center performance. In terms of how well they control the cost, in terms of how much revenue they bring in for the company from their department's performance aspect. Next, we have procedures. Procedures. So procedures, these are the steps, right? These are the various steps or methods, the methodology aspect that follow to record and process transactions, such as recording sales, updating ledger, preparing reports, so on and so forth. So different user, they are in charge as part of the system design to handle different procedures, and all these procedures that is being entered by all the user in the respective module will derive at a reliable and relevant financial report at the end of the month or at the end of the quarter reporting. Now we come to the third component, that is data. So essentially, these are the financial informations about business transaction. We have sales figures, probably break down into sales by customer, sales by product, sales by geographical area, so on and so forth. We have expenses for the respective cost center and profit center. And of course, we have the assets, such as the fixed asset, current asset, and we have the liability, long-term liability, short-term liability, amount owing to supplier, so on and so forth. The fourth component, software. Software. Computers programs embedded with the logic at the back end to be able to establish the sensible logical steps to be able, therefore, to process accounting data. We have typical software like Xero, very popular since 2015 when it was being launched. We have QuickBook, MYOB, and SAP. And of course, for a system to work, software itself is not sufficient. You need to have the hardware to complement it. So under the IT information technology infrastructure, we have the hardware and the require network systems to be able to support the AIS smoothly. Example, computers, servers, scanner, cloud storage, such as those in the cloud, like public cloud, private cloud, so on and so forth. Last but not least, we have internal control that is being embedded as part of the system design. These are the policies and procedures to ensure data accuracy, security, and reliability. One classic example is segregations of duty. Segregations of duty whereby a storeman, he enter quantity received, but he cannot see the pricing. After that, you would have the accountant to pull the quantity to match with the supplier invoice value, so on and so forth. Password approval limit and audit trail are the internal control that is being used to set up different user. You can only access accordingly based on the password that's been assigned to you. When we talk about approval, the authority metrics in terms of approval limit, certain user, such as let's say the finance manager, can only approve inside the system as far as payment is concerned for certain threshold values, the upper and the lower boundary. And of course, higher values, you need higher authority such as the CFO to approve. So in short, the components of AIS once again make up of PPD, SII, people, procedures, data, software, information technology, infrastructure, and internal control. So over here, you can remember these acronyms: PPDSII, PPDSII. Next, we comes to LO 3.4. So under 3.4, we have the manual systems. Many years back, businesses use paper, they use physical books, and all the records, they write it down. Of course, back then, we don't have mobile phone, we don't have WhatsApps. So they literally use papers, use physical books to record all the transactions, all the small little details. Small sole proprietorship using notebook. As times evolve in the early 20,000, we have computerized systems, a more stabilized computer systems whereby accounting software is being used to automate processes. QuickBook, Zero, MYOB. After that, we talk about ERP system. ERP system stands for Enterprise Resource Planning. This is a higher level systems whereby it is being designed to cater to more complex business transaction. It is being used to cater to higher volumes of business transactions, whereby the user, the owner, will want to dive in and to have better traceability, better clarity, visibility on the stock balances, which stock is selling well, the margin that is being earned for the respective product, so on and so forth. So with that, we have SAP, Oracle, and NetSuite accordingly. These are the example for ERP. So in short, manual system, computerized systems, and last but not least, integrated systems. Three point five LO talk about analyze how an AIS work. So typically, you have the input that's provided that it is reliable, it is relevant. You have the processing. Of course, you have the storage, output, feedback, and whatever constructive feedback, it will loop back to the input to improve the system in a sustainable way. Under input, explanation, collect and entering data from source documents such as invoice, be it whether supplier or customer. We have the PO, we have the purchase order, sales order, so on and so forth. Example, sales invoice enter into zero. Next, processing. Processing, you have classifying, summarizing, and recording the data. Classifying, summarizing, recording the data in terms of using the accounts, ledgers, so on and so forth, based on the chart of accounts set up on start. The system will help you to summarize into the respective categories such as asset category, liability category, expenses category, revenue category, so on and so forth. The system automatically posts to this ledger based on the design, based on the embedded logic behind for every user app. Next, we have storage. Storage, keeping data for future use or audit. And nowadays, a lot of all these storage are in the cloud. Output, produce reports and statements. Not necessarily financial statement. It can be budget report. It can be sales report. Breakdown into product level, customer level, so on and so forth. Even geographical level as well. Example, income statement generated monthly. Of course, last but not least, constructive feedback is always important. Reviewing information to make decision or corrections. So maybe the system was initially being set up using two-way match. DO map to invoice. After that, after feedback, the company improved by having a three-way match whereby it mapped the PO to the DO to the invoice for better control in that sense. So manager reviewing financials performance report is another classic example. So all in all, for the stages as far as AIS, we have the input, we have the processing, storage, output, and last but not least, feedback. 3.6, 3.6, identifying the advantage of computerized AIS. So you can see that these are all the ticks, these are all the advantage. Let us run through line by line items. The first one, speed and efficiency. Speed is very important, right? Speed matters. Processes transaction quickly and accurately. That is the purpose of AIS. Reduce human error through automatic calculations. Important as well because human make error. And when you have overwhelming, when you have huge volume, doing manual work just doesn't sounds right. For sure, whether it is A, Mr. B, Mr. C, everyone will make different mistake. And the mistake will increase when the volume increase. Easy access and report. Real-time financials report available anytime. So anytime, anywhere with the cloud software like Zero, the moment the user, especially the boss, access Zero using his mobile, he will be able to see the past historical financial performance, maybe the previous quarter, and he can also compare with the same quarter for the previous year. Data security, control access, different user have different ID, different access, and there's the audit trail as well. Storeman A versus storeman B, key in the quantities of goods that they receive at different point of time for that month. Backup, protect data, right? When you have a database that due to whatever unforeseen circumstances, unfortunately crash, you have the backup data to reinstate back so that data are not totally lost. Because data that's lost is equivalent to loss of financial dollar and cent for the business. Better decision making. Provide up-to-date information for planning and control. With all these informations being processed by integrating all these different modules for the AIS, as a whole, the system are more than ready to be able to provide the reliable, up-to-date information for the management to thereafter do their necessary planning for the long-term business plan projection, and more importantly, for control purposes because when you are able to use a system to help you to control your asset of the company, you are in the right start state for further growth. Next, 3.7, evaluate the limitation or risk of computerized AIS. So this one we talk about the risk and the limitation. System error or failure, technical issue might disrupt work. So sometimes you come across situations whereby the crowd accounting software or the ERP software are not working. The data that you try to churn out, the data are not there. Cyber security threat, or this is something that is evolving, right? The risk of hacking or data loss, someone hacked into your server, someone hacked into your system and stole the confidential info. Training course, staff must learn how to use new system, because if you hire someone who don't know how to use the system, don't know how to go about navigating the different button required to get his or her job done properly, then that itself you will have training costs to be budgeted aside to train all this staff to be competent. Dependence on technology. What if today there's no electricity? What if today the system crash? What if? The many what if are the business risks, especially in the context of technology. So these are the limitations, these are the risks of a computerized systems that the company, the management need to bear in mind, and for them to mitigate all these risks accordingly in the short run over time. 3.8 3.8 we talk about assessing the relationship of AIS and ethics. So we have assessing the relationship of AIS and ethics. So accountants must use AIS in a responsible manner and in an ethical manner. So maintains confidentiality of data. You are empowered with the rights to access certain module that comes with the privilege of accessing certain confidential information. Let's say, for example, if you are a sales and marketing manager, for sure you have access to the pricing history of certain product over time. You need to be of an ethical standard to ensure and making sure that you don't leak out all this information, whether it is intentionally or unintentionally. Next, ensure accuracy and objectivity in recording. Now, when you are doing all this recording, when you are churning out, let's say, for example, GST F5 form as an accountant, you have to make sure that these are the figures for you to be able to give you that confident level without any user intervention or any manual intervention or any unauthorized manner to amend the values. So all these are important because if you have that kind of control to be able to integrate the system platform for seamless integrations with the government portal, that itself is enhancements of security. So use the system in a responsible and ethical manner. Next, protect data from unauthorized access. Yes, if your system is being hacked, then this is where the risk of losing all this data to unauthorized stakeholder will be high. And therefore, it is the responsibility of an accountant working closely hand in hand with the IT department to enhance the access feature so that only the right people with the right access will be able to get all this information and to manage all this information and data in a responsible manner. Follow professional standards and law. For example, PDPA what need to be disclosed, what shouldn't be disclosed, especially if you are in the business of B2C versus B2B. For B2C, you will have more confidential information as far as the publics are concerned. Their information such as their year of birth, their important information such as their identity card number due to professional requirement. So all these are important, and the accountant need to make sure that it is not just about generating reliable financial statement over and above. It is important to ensure that all these checklists are being ticked correctly, regularly. With that, we have come to the end of the LO for Part 2, AIS, Accounting Information System. Let us test your knowledge in the next few slides. This question 3.1 talk about the definition of AIS. So let us run through. Recruiting, training, and managing the business employee. Collecting, processing, storage, and reporting financial data for the business. Researching competitors and forecasting future market trend. Handling the physical movement and storage of all inventory and supply. So one part, when you look at this question, the possibility that come to your mind, do an indication. But of course, look through the question in detail first. So when I look through a quick glance, right, I kind of like feel that B might be the answer. So let us put the asterisk here first. And now let us dive into the question to see whether there's any requirement or any additional info that we need to pay attention to. AIS is best described as a structured set of resources like people, data, and technology designed for which primary function. Recruiting, training, and managing the business employee, this one, it should be under the HR system. So A is wrong. B, collecting, processing, storage, and reporting financial data for the business. This seems to be the case because we are talking about the steps of accounting cycle, right? Over here, under accounting system. Let us confirm that B is the correct answer by making sure that C and D are not justifiable to be the answer. So for C, researching competitors and forecasting future market trend. So this is definitely out of AIS scope, right? Because when you research competitor, it's important. It is important. Forecasting future market trend is important, but this it should be under marketing sales system, right? Whereby you focus on the funnels, the sales funnel, the lead conversion, so on and so forth. So C will not be the answer. Let us take a look at D, handling the physical movement and storage of all inventory and supply. So this one is talking about warehouse management system, warehouse management system. WMS. WMS is important, especially when you are in the business running different stock levels, buying and selling of stocks, manufacturings of stock from raw material to work in progress, and integrating with accounting information system. But in specific for this question, this is not the answer because the answer is asking you about the primary function of AIS. It is not asking you about the primary function of WMS. Although these two systems integrate together especially for company that's handling goods. So D would not be the correct answer, and therefore the correct answer will be B. B. Collecting, processing, storaging, and reporting financial data for the businesses will be the primary function of an AIS. 3.2. LO 3.2. Identify the purpose of AIS. Over here, the report generated by the AIS are primarily used by management internal stakeholder, yes, to achieve which objective? A. To calculate personal income tax, no. The word itself, personal, you know that for sure this is not the answer. To calculate the personal income tax of the business owner, personal income tax, it must be separated from the business. So therefore, A is not correct. B, to purchase new raw material from supplier. Now, this is more under procurement system, right? Procurement system. The procurement system or the purchasing system will allow the procurement officer or the purchasing manager to analyze and thereafter to issue PO to the supplier for the company. And therefore, in this instance, it is not the objective of AIS to do so. C. We talk about automatically prevent all employees from making error. No. Over here, it doesn't automatically prevent all employee because as we always mention, input is what it all matters. Your input go into processes, output, the output will only be reliable if your input is reliable. So accounting system will never be able to prevent employee from making error as far as the output, the report is concerned, if at the first place, the input given by the employee entering into the system itself is not reliable, relevant, and not accurate. So the answer, therefore, it is going to be D, whereby under D, it mentions that the objective of the AIS is to evaluate the business financial performance and plan for future operations. So evaluate the financial performance. Typically, this financial performance, it is the historical data so that you'll be able to plan for your future operation. 3.3. 3.3. Let us now look at 3.3. Describe the component of AIS. Which component of the AIS refers specifically to the physical equipment such as computer, servers, and printer used to store and process the financial data? So over here we have hardware, seems to be the case. So let me just put an asterisk here. Software, typically we will be able to know when we look at the names of all these software such as Zero, QuickBook, MYOB. And therefore, in this instance over here, it didn't tells you the names of all these software. So this is going to be the wrong option. Next, we talk about data. Data itself, it is not essentially the best word to describe computer servers and printer because computer servers and printer in this instance, they are the infrastructure that is being used to store and process the financial data itself. So C is also the wrong option. D, procedures. Procedures definitely are not referring to computers, servers, and printer, right? It is a set of embedded logical steps that is being designed to be embedded into the systems. So once again, all in all, B is not the option. Likewise for C and D. And therefore, the answer will be A, hardware. refer to computer servers and printer, and these are the physical equipment. Answer A. Next, 3.4. Differentiate the types of AIS. Differentiate the types of AIS. Question. What is the primary differences in how manual and computerized accounting information systems store financial record? The primary differences between manual and computerized system in specific AIS accounting information systems. So what are the main differences in terms of these two systems for storaging financial records? First option, manual systems only record transactions. Computerized systems only summarize them. No, computerized systems record as well. So A is wrong. B, manual systems use physical paper ledger. Computerized system use digital files and database. Seems to be the correct option, but let us confirm by looking at C and D. Manual systems focus on asset. Computerized systems focus on liability. No, this is wrong. Both systems, of course, right, focus on asset and liability. Wrong option, C. D, manual systems require specialized software. Specialized software, computerized systems require specialized filing cabinet. Again, wrong. Manual system on start, it is all about papers. It is all about physical notebooks. So therefore, D would not be the correct option. And furthermore, computerized systems, under no circumstances, it require specialized filing cabinet. This doesn't make sense. And with that, the answer will be B. B is the answer because B says that manual system use physical paper ledger. That makes 100% sense. And it says that computerized systems use digital file and database. And therefore, answer is B. Next, 3.5. In the workflow of an AIS, what is the processing step primarily involved in? So there's a different workflow of an AIS. If you recall, one of it processing exactly what is the purpose, what is the function of processing. So processing, is it about making final decision based on the report? So let us once again recap that we have the input, processing, and the output. For A is talking about more of making decision after the availability of the report being generated. So A is wrong. B, classifying, calculating, and summarizing the raw data. So over here you have classifying, calculating, and summarizing. This seems to be the correct answer, but let us look at C and D. Distributing the finance report to internal manager. So once again, distribute the report to managers. This is after the output, right? This is after the generating of the report. So C is wrong as well. D, gathering initial proof of the transactions from customer. Gathering initial proof of the transactions from customer, right? Gathering the source documents from the customer, so on and so forth. So therefore, this one, it fall under the on-start data collection. So if it fall under the data collection at the very on-start under input, right, that would be wrong as well. Let me give you an example. What do we mean by gathering initial proof of the transactions from customer? Maybe you provide services to the customer. Maybe you are IT company. You establish network services for your customer, and therefore you need to get your customer to sign service report whereby they accept. Now once you are able to secure this service report that is being signed and accepted by the customer, satisfactory that your performance have been completed, you will then be able to bill your customer with this as an initial proof. So this one, it fall under the on start. So once again is that it doesn't fall into processing. The best description under processing will be B, classifying, calculating, and summarizing the raw data. Classify, you calculate, and you summarize. All these fall under processing. It all fall under this box called processing. So answer B. B is the answer. Next, what is the main advantage of a computerized AIS offering speed and calculations? Once again, what is the advantage of an computerized AIS offer regarding the speed and the calculation? It eliminates the needs for any subsequent auditing. No, that's not the case. It enhances the audit process to be smooth, right? Because the auditor, instead of asking you for the hard copy, instead of asking you for the thick hard copy reports, the thick general ledger printout, the auditor can be guided by you to access to the system itself and to be able to audit based on the system information that will be able to churn out faster data, churn out faster required report as per the auditor request. So A is not the correct option. B, it guarantees a higher net profit for the business. No, that is not true. To be able to guarantee a higher net profit at the first place, this is wrong words, right? No business can guarantee to its internal stakeholder, no business can guarantee to its external stakeholders such as the bank or even the investor as a whole that the business after getting a computerized AIS guarantee it will be able to earn higher profit. That is just not the case, because to be able to make a net profit, it boils down to the ability to make swift and decisive decision at a point of time after factoring all the calculated risks by the management, and also depending on the market, depending on the overall economic performance of the country as a whole, the region as a whole. C, it requires less management oversight than a manual system. It requires less management oversight than a manual system. This, there is a little bit of a possibility as far as this option is concerned, because it is an advantage whereby the management don't need to really micromanage all this information, because it know that there is a system that can help it to process the data with higher accuracy. So this one for sure more error. So more error require more oversight. But let us look at D. D. It process a large volume of transaction quickly and significantly reducing arithmetic error. So when you look at C and D, between C and D, right, it only makes sense that by answering to the question asking you what is the main advantage, you will know that for sure D is going to be the answer. Why? Because D says that the benefit, the advantage of a computerized AIS to be is that it's able to handle huge volume of transaction quickly. The keyword is large volume, huge volume, quickly, and significantly reduce errors, especially in the context of manual system. You have a lot of human error, but for computerized AIS system, it significantly reduce arithmetic error, and therefore answer will be D as compared to C, because C for sure is not going to be the main advantage. It does require lesser management oversight than a manual system, yes, but it is not by itself the main driving force behind the main advantage of having a computerized AIS for the company. So answer would be D. Let us now look at 3.7. This question, evaluating the limitation or risk of computerized AIS. So over here, the question asks, what is the memory limitation of switching from a manual AIS to a computerized AIS for a small business? What is the memory? The keyword is memory limitation. Which limitation is the primary reason of switching from a manual AIS to a computerized AIS? for a small business. The high initial cost of purchasing software, hardware, and staff training. This seems to be the case, but let us look at B, C, and D. B, the computerized system will record fewer types of transaction. That's not the case because whether you are using manual or you are using AIS, the thing is that the volume of transaction is still going to be the same. C, the final financial report will be less reliable. That is not the case. The reason is the fact that you want to change from manual to a computerized AIS is for sure the probability of getting the report to be reliable is higher. So this is wrong. D, the business will require a more physical storage space for record. That is wrong because when you have a computerized AIS, essentially your paper volume reduce and therefore more storage will be free up. So when the option says that the business will require more physical storage, this is wrong. Answer in this instance, A, the higher initial cost of purchasing software, hardware, and staff training, especially when you talk about implementing a ERP systems for the company. With such an ERP platform, definitely you need to send staff for training. But of course, on start, we have to perceive this to be an investment. The investment of the human capital. When your staff have that kind of knowledge, the knowledge management as a whole benefit not just the company, but also the employee in terms of his or her long-term career as well. The initial cost, yes, for sure, dollar and cent. When you want to get such a computerized AIS, you need to set aside, we call this the CAPEX budget, CAPEX budget, all this to be factored in whatever profit that you have earned over time as a business owner for that particular year, instead of declaring as a bonus, declaring it as a dividends, right? Set aside because you know that setting aside all this for a good purpose, setting aside this CAPEX budget as a whole will help the company in terms of being able to streamline its processes, being able to help the company to reduce human error, and therefore having a more reliable financial report for better and more accurate decision making for the future profitability of the organization. So answer will be A. A is the answer. A is the answer. We come to the last question, LO 3.8. Assess the relationship of AIS and ethic. An ethic issue arises when an accountant deliberately enter a false, so the keyword is deliberately go and enter a false information into the AIS to misstate the business profit. These actions relates to which concept? Lack of customer service. At the first place, the accountant, he or she is not a customer service staff. Answer, wrong. For this option is wrong. Slow processing speed. So processing speed, again, this one is not the concept. On the flip side, when you use AIS, the processing speed will be faster, right? So slow processing speed itself, it is not a concept that relates to the fact that the accountant deliberately go and enter false information into the AIS to misstate the business profit. C, data manipulation and fraud. Okay, this is highly likely going to be the answer, but let us look at D to confirm. D, inefficient hardware. Now, this whole entire question, right, it have nothing to do with whether the hardware or even whether the software is efficient or not efficient, right? So at no circumstances, this is the correct concept to describe the act of this accountant. So D is not the option, and therefore, for sure, C is going to be the answer. The act of deliberating entering false information into the AIS to mistake the business profit is an act of fraud, whereby the accountant exhibit an undesirable act of data manipulation. So answer is C. With that, we have come to the end of our part 2. Let us now do a quick recap of what we have run through in part 2. For part 2, there's quite a fair bit of LO. We talk about the definition of AIS, identifying the purpose of AIS. We talk about describing the components of AIS, differentiating the types of AIS, and importantly, analyzing how an AIS works. And with all this in mind, right, we thereafter learn the skill set of being able to identify the advantage of computerized AIS. Last but not least, we evaluate the limitation or risk of computerized AIS, and the final LO sum up this whole entire part 2 learning, whereby we assess the relationship of AIS and ethics. If you enjoy this lesson and want to dive deeper into more accounting topics, come learn with us at A1 POA. You have taken the first step by watching this video. The next one, join A1 POA to level up your knowledge from 0 to A1. Master POA with confidence. Don't forget to like, share, and subscribe for more accounting tutorials. You can also reach out to us via WhatsApp. Details are fresh on your screen for enrollment information. This is Lawrence Pong from A1 POA. See you in the next lesson.